Morning, everybody. How's my microphone volume? Is it all okay? Because I did some testing with the microphone yesterday with new software. So I don't know if it works or not. It's impossible to tell because unless I record myself and watch myself back, I've no idea. But anyway, and it's very dark in here today. I've taken I had a big picture on my wall behind me. And it obviously used to reflect more light because I'm looking at myself now thinking, wow, I'm dark. Really dark. It's pretty weird in here. Morning, everybody. Paul, Champagne, Monkey, Virginia, Mumo, Gregors, Rodrigo, Vitali, Callum. How are we all doing? All good. So this morning, going to cover the news. I have decided to go with the members streams, hopefully starting next week. I'm putting together all the content basically for the first month and the strategies I want to develop and test and everything I want to do basically. So I've set up all the memberships so they're hopefully ready to go. So yeah, I'll update you on that with more details, but I think they're all live actually. I think you can actually join now. Oh yeah, there's a join button. There's a join button. There you go. So go and investigate that at your discretion. But yeah, I'll announce more on it later. Morning, JC. Everybody else. Right, news today. So yesterday we didn't have a lot of news. We did have some movement though. The market was fairly lively yesterday. That's 67 off of a 67 ADR. So we had an ADR hit there. There's a few ADRs hit yesterday. Yesterday I did quite a lot of banking and drawdown control. So I banked 1.6% yesterday. What did I bank yesterday? New Zealand dollar, US dollar. So that Pen, where are you? Stop advertising to me every time I launch you. It's slightly annoying. That was the H1 and ADR mean reversion from Tuesday. So I got out of that yesterday. It actually went further. I posted that one in Telegram anyway, but actually went a bit further, but very, very clean, easy ADR reversal straight down to target. And then it went way beyond, hit yesterday's low, and now it's bouncing back up again. So that was a pretty good one. You had an ADR on this yesterday. So if you took the ADR reversal on this yesterday in the opposite direction, well done. Because this was 97, 150 ADR yesterday. So if you took, why the hell is what is going on? That's why. Sorry, my terminal all went a bit weird yesterday as well, and all my buttons are in the wrong place. So if you took the mean reversion yesterday off of ADR, you got in somewhere around here. So that's in profit, or you may have got in this morning, but you wouldn't have got in this morning because it was an ADR. But yeah, you'll be in profit on that one at the moment today. So that worked out nicely. Euro pound, I did a load of banking. I did this live on stream, so you probably already know about this. But the aggressive drawdown control position that I took on Tuesday, I closed that out yesterday when we hit this propulsion move. In fact, that whole area is one big propulsion move, although it's over 2 candles. So I was anticipating basically some sellers entering the market at that point. So I got out there, did a 50% drawdown control on that one, and I closed around about 35% of that one here. So yeah, and then obviously another trade went on there pretty much at this, not the same spot, but yeah, another one went on yesterday. So looking for basically a push up into retesting this area. So this would be a nice deep pullback, but it may not get past this area. So we'll have to see what happens with the euro and the pound today as to whether they decide to push that further, and obviously we'll deal with it as necessary. That was it. Yeah, so that's what I banked yesterday. So pretty good. What happened to my room? Not a lot. I just basically had a picture, a massive picture on my wall. My room's always been this colour. This is a colour called Railings by Farrow and Ball. And it's not black, it's very, very, very dark blue. Yeah, so I just basically took a picture of my wall, and I also decided to adjust the zoom level of the camera. So I was kind of like this. Now I'm like this. So I just changed it a little bit, basically. Just trying to give myself an uncluttered background as much as I can. I don't see the join button, don't you? Oh, well, that doesn't work then. I don't know. I don't know how it works. As I say, I've just literally done it. So there's a join button there, look. Let me put this into incognito mode. So I'm not logged in. Yeah, whatever. There you go. There's a join button there, look. Hey, look, merch. I've completely forgot about merch. Yeah, there you go. You can buy some crappy merch as well if you want. Don't buy the crappy merch. I don't even know how. I haven't looked at that for years. Anyway, so yeah, there should be a button there. If there's not, I don't know. Let me know. If you go to any video on the website and put /join on the end of the video, that will automatically take you to the membership area, in theory. But as I literally set this up yesterday, I got an email from YouTube this morning saying you're authorized. That's all I know. I haven't looked into it. So if it's not there, yeah. What happened to the devil horns? They are still here. I just took them off the chair because I thought they're annoying. So yeah. I might put them back. There we go. I think it's because you're on mobile. Oh, it might be. I honestly, I have no idea how it works. So this is going to be a learning curve. Wife cut the lamp for power saving. Yeah. No. Right. Okay, so let me just adjust that now. There we go. That makes sense. So that should actually be down there. Sorry, I'm just going to adjust my charts because my MT4 got screwed around with yesterday. And my windows are in slightly wrong places. Okay. Morning, Harold. Morning, Jed. Morning, Pot DJ. Right, so yeah, news today. Not a lot happened yesterday news-wise. We had new home sales. We did get a bit of movement off of that. We had the CPI come out for Aussie, which was as expected. This morning, in 20 minutes, we have the Swiss rate announcement. So we are forecasting a 1 on a 1.25. If we get the 1, the market should have, in theory, factored that in. However, we've had some really bullish movement on the Swiss franc of late. Yeah, so Aussie pushing up against the Swissy. Yeah, so we did have some. Yeah, so they've been unwinding, haven't they, for the last 2 weeks. So this massive bullish move that we had on the Swiss, obviously they've unwound that. So this is them factoring in the weakness in the Swiss, basically, for that 1% interest rate. So if we get that, we probably won't get a massive move. We may well get a whipsaw, we might get an ADR, but we shouldn't get really a big move off the back of it because the market is expecting it. What the market wants to know is what's happening next, and that's where the press conference comes in. So 9 o'clock, Jordan will be explaining what the future guidance is for the Swissy. Yeah, and basically off we go from there. So we'll wait and see what happens with the press conference. So you're likely to get a move somewhere between 9:15 to 9:30 if there is anything to move on the Swiss. The GDP for the pound, for the US dollar, is coming out an hour before market open, along with unemployment claims. So that's your main market mover today. We've also got Powell speaking, and annoyingly, he is speaking 10 minutes before market open. I hate it when they do this, because the open of New York will be massively affected by any dollar movement. If Powell says anything impactful around about the market open, the market will just be completely unpredictable. Not necessarily a bad thing, because when you're trading things like the opening range breakout or the stock index hedge strategy, if you're the right direction when Powell moves the market, you're going to get a 5R. If you're not, you're going to get stopped out quick. So we'll wait and see what happens. But I doubt he'll say enough before the market opens to make the market move dramatically. But if we find there's a massive spike pre-market, I would stay out, or at least stay out of the pre-market range. You could still probably take the 5-minute opening range, but I wouldn't take the pre-market, because well, you won't take the pre-market anyway, because it probably moved too far. But it might be a bit of an exhausted market, so just be aware of that this afternoon. I don't know why they do this. They just start talking before the market opens. ECB Lagarde speaking later. We've got pending home sales and other bits and pieces, so but nothing else impactful. So that's really it for today. GDP and unemployment is your main focus this afternoon, and obviously the Swiss. So if we have a look at the markets this morning, long break on the DAX, hedge on the FTSE. So DAX has broken up. We had a really big move up this morning. So that's where we closed yesterday on the DAX. There's all your pre-market movement, but there's a massive gap basically today. Gaps get filled, as we know. So it's either going to fill today or it's not. We don't know. So we'll see basically what happens. But it's broken along so far this morning. We're out at new sort of high levels on the DAX. So we're in uncharted territory. Where we go from here, nobody knows. So it's quite often when we get an all-time high break that the market is exhausted by getting there, and it usually pulls back. So it may well turn into a hedge today. If it does turn into a hedge today, it's a really easy hedge. We're going to target the gap, which is 125 ADR to the downside. So what was that? Hey, look, there's a dollar sign on the screen. Jules, welcome to the private streams. You've just become a member. Welcome aboard. You're the very first member. It works. Look at my face. It works. I'm not smiling because I've just made £35 or whatever it is. I don't even make that much because they take a cut. But anyway, I'm smiling because it works. Thank you, Jules. So you will be in the first private streams, which will hopefully be starting on Monday. So yeah, there we go. Jules is aboard. Welcome aboard, Jules. We're going to be doing lots of exciting stuff. Will you go over each membership level on YouTube? Yeah, can do. DAX, the German economy is tanking. So why is the stock market going up? Yeah, don't know. We'll see. But today, it's a break long into all-time highs. So we're either going to get some momentum on this break, or we're going to hit basically a brick wall. So we'll see what happens. But it's a fairly easy play today. Back down to the gap fill, if we can get there. So yesterday's high is kind of around here. And the close is down there. So this area basically, which is ADR low today, would be where I would head for with the hedge. And you can see my 5R target basically is there. So DAX, the FTSE's already hedged this morning. So yeah, so we'll see where that goes in a minute. Market seems to have completely stalled out at the minute. So there's your target to the downside if it goes there, but we are totally deadlit. Not going anywhere. So yeah, memberships. Basically, what I've done, there's many ways to set the memberships up. So this is what it would look like. Yeah, so the best thing to do is probably go to join, isn't it? Yeah. So I've set it up in three levels, basically. So up to you what you do. I didn't know what to charge, basically. I had people contacting me saying, I'll pay you £200 a month. I had other people contacting me saying, $2.99. So you can see the spectrum was quite wide. So that made it very difficult to pick a price point. I looked at other people that do something similar. They're all charging 100, 200, ridiculous amounts of money, in my opinion, for that. There is so much education for free on YouTube, including mine. You don't need to pay for courses in that way necessarily. So what I'm doing is delivering content and interacting with you. So it's a live course, if you like. That is what this is all about, a live course on strategy development. So I put 3 levels up. You can pay for whatever you want. It's kind of, what do you think it's worth? Up to you. Start off low if you want. If you really appreciate it and you've got tons of money, give me 139. I don't care. It's up to you what you pay. But it's basically 3 tiers. First tier, it gets you access to the strategy development sessions and trading education streams, basically. So it's a private stream every day. And what we're going to do is we're going to do strategy development and training. So I've got a massive training plan set up to do with everything from price action all the way up to strategy development and robustness testing techniques, everything in between. And dude, Danny's just subscribed. Thank you, Danny. Welcome aboard. It's 2 members I've got. How exciting. Don't do it yet. I just want to explain what they are. But thank you, Danny. Welcome aboard. And you get a little star next to your name as well. So what it's about is basically strategy development. So the strategy development sessions will be me backtesting, showing you how I backtest, and I've got an EA ready to do strategy development, which is like a Swiss Army knife, which can trade absolutely any strategy in any way that you can possibly think of. There's only a number of ways that you can trade. Yeah, you can get in, and once you're in, you've got targeting you can do, you've got stops you can do, you could turn it into a position trade, you can use a trailing stop. That's it. There is nothing else in trading. When you press that button, it goes up or it goes down. You can then do a number of things. You can get out after a certain period of time. You can have a fixed stop. You can do all sorts of things, but there's only a limited number of stuff that you can actually do when you're in a trade. So I have an EA ready with every single possible trading condition after entry. So what we can do is we can plug any condition and signal into that EA and test it. So that's what I want to do. And I want people to bring me strategies, if you've seen them on YouTube, if you've seen them in PDF form, if they're old strategies, doesn't matter what the time frame is. I'm going to be doing my own stuff, but I'd much rather do stuff that you want to do. Yeah. So that's what the strategy development sessions are going to be about. Trading education is basically me delivering a piece of educational content on a subject and then you Q&Aing. So all the stuff that you get when you read a book, you have questions. You go, I kind of get that, but I'm not quite sure about that bit. Ask the question. Yeah. Or you watch a video and you go, that looks good on paper, but I don't understand why he would do that. Ask the question. Yeah. So I'm just going to deliver stuff about everything to do with training. So a lot of the stuff in the bootcamp I will recover because it hasn't changed. But that's more the general content rather than the position trading content. Yeah. So price action, how the market moves, all that sort of stuff, indicators, just basically talking about everything that is important. And then you can interact with that. And then you can say, I want a lesson on X. And I'll go, anybody else want a lesson on X? Yes. Okay, then I will put together a lesson on X. Not because I'm an expert in necessarily X, but I've been around for 17 years and I don't think there's much that I don't know in this industry. Yeah. So if you ask me for a lesson on X, I will go, right, you wanted to know about this? Right, it's a load of crap and this is why. And that'll be my opinion on it. if it's something that is useful and I can build a lesson on, I'll build a lesson on it. And what I'll do is I'll build up these banks of lessons and we'll just repeat them every month or so that it gets ingrained into your head if it's important. But I've got a list of stuff that's important. So I've got plenty of content. So that's the basic level. The super supporter level, yeah, is the same. You get the same stuff, but you also get discounted EAs. Yeah. So all of the EAs that I build in here and that are already available, you get a discount off of those as well. Yeah. So it's not really worth, you know, the discount is going to be something like 30%. I haven't decided yet, 30% off or something like that. But you'll get that as well. And also priority reply to comments. So you'll get, I'll know who you are. And if you're talking in the streams, I'll talk to you first because you're paying more money. Simply the way it works. Doesn't mean everybody else is not going to get it, but you know, some people are going to be more interactive. Don't have to be, but anyway, so there's that level. And then there's the mega fan and tester. I wanted a level where if you think it's really useful, everything that I do, and you want to give me more for it, that's literally all it is. It's not, I'm giving you so much more value, but if you want to pay more, pay more. Some people tip, some people don't. Yeah, that's it, literally. So it's just another level, but you will also get involved in EA development with me. So the EA that I have, the Swiss Army knife, as I call it, I have a version of that you can have, which is basically my version. It only works in the strategy tester. So you can't live trade with it, basically. It's not a usable EA. It's a testing EA. It's a testing development EA. You can have that. And when I'm doing different development, I'll send it to you and you can do the development as well. So kind of a helper level, if you like, but not so much a helper level. I really want to follow this route and test my own, in which case here's an EA I've built and you can have that to test with. Yeah, so it gives you that extra, you can go off and sort of do more work yourself type level. Yeah, so that's basically what that is. So those are the levels. There's 3 of them. You can pick one. If you don't want to, that's fine. I'm still going to be doing the free streams. It's just those are going to be very organized and very targeted and more mentor based. Yeah, so you learn more from talking to people 2 ways rather than having being spoken to. So that's what that is. Yeah, so there you go, there's the memberships. I might clip that and put a little video up if it made sense. But anyway, morning Neo, how we doing? So analysis today. Let's just quickly see what the DAX is doing. Stuck. Cool, we're almost up at ADR, but that's because of the gap and the pre-market. Not actually up at ADR because the market really opened there. So I've got a hedge of 280 to cover. Do I take that now, or do we think it's going to rally today? What's the US doing? Blimey, US is rallying as well pre-market. Look at the Globex session. Wow, we've nearly hit ADR on the NASDAQ in Globex and the S&P. All markets moving today. Have I missed some news? Let me just quickly check the news. And this morning I did scan through. I didn't see anything interesting. Asian markets have rebounded. Could be to do with that. But don't know. Interesting. Spurred on by gains in Asia Pacific. Yeah, so Asia's had a good morning, which has opened everything in New York and Europe long as well. Okay, that's why. So there you go. I might leave that on then to see if we get some more movement on that DAX this morning. No, it's stalled out for the last 20 minutes though. And the FTSE's coming down. China stimulus, yeah. Okay. Right, FX wise. So this morning we've got one ADR, which is the Aussie dollar Swiss. So looking at the Aussie Swiss, we've had a big move up this morning. Let's quickly look at the other Swiss pairs. No, this is it is a bit of a weakness in the Swiss franc. Yes, it's weakness in the Swiss franc, but also we've had some strength in the Australian dollar overnight as well. So it's a combination of the two. So Aussie dollar Swiss is your perfect storm today. We've had Swiss weakness during the Asian session, and we've had obviously bullish moves during Asia for the Aussie. So Aussie Swiss is an ADR hit already this morning. Really, that's my next short, and you missed it by that much. I'm just taking one. That literally was the line for the next entry. So I'm taking that. It's a potential double top rejection on yesterday's high as well. So it's a good level for a second entry. So that's your ADR hit today. Obviously, if you're doing the ADR reversal, you can drop down. Reversal alert has literally just gone in exactly where I've taken the trade. So if you want to take the scalp move, you'd be looking to come down into there. Obviously, I have more than one position on this. So this is horrible, horrible price action. Look, this is my third entry on this. It's just been grinding by virtually no distance every day. Look, it's just a grindy, horrible mess at the moment, this Aussie Swiss. Swiss franc stuck. So we got some big volatility potentially coming in today on the Swiss. So I'm not going to target there. That's where my old target was. So new target. It's very tricky now, actually. In fact, I do like that target. This propulsion move is very strong. The trouble with this now is when you get a move like this, where you're just grinding in a channel, you've got a potential target there, and that propulsion and there. So that area there is probably, if it drops, the strongest bounce point. But you've also got daily lows. You've got 3 daily lows and an end of session low, which are kind of potential support to the downside. So if we do put a double top in here and start to reverse, you can bounce anywhere here. So my average is here. That is the first support, which is the end of yesterday's session, and that's yesterday's low. So 100 to 125 ADR would be a good exit today. But I'm going to leave the targets where they are. It's highly unlikely they'll get hit, even if we do get some massive movement on the Swiss franc. But I'll put them there for the moment. And then if we get a 150 ADR hit on the Swiss, fantastic. I'm out. So that's your only ADR today. Weekly ranges, we're on Thursday. We've got 4 weekly range hits so far. Euro, US dollar. That hit yesterday and has already played out. You've missed it. So that was the entry yesterday off that beautiful monthly resistance bounce. Look at that. If you ever want proof of limit orders at highs, there it is. So yeah, beautiful wick rejection there. Again, this is another strategy I'm going to work on in the private streams, the double wick retracement, or what they call tweezer tops. So it's a pattern that doesn't appear very often. It's not something you can set up as a strategy and go, hey, I'm going to make this my strategy. It's a strategy you can add to your portfolio, but that pattern is incredibly reliable, especially if it becomes part of a 4-bar pattern reversal. Yeah, so it's a little bit like the 3-bar reversal, but it uses 4, and it's a double rejection. So for 2 hours, the buyers tried to continue the move, but the limit orders at the monthly high stopped, and they just continuously hit them. Basically what they call the iceberg. So you hit the iceberg and off you go. Beautiful. That's the reversal alert, but you can get in there. That's a more aggressive entry, but obviously highly more profitable. So yeah, good potential drop there. And continuation. So the US dollar, again, really neutral now on the US dollar because they've dropped further than expected. So you should be able to trade it in either direction. Wasn't an entry for me on that one yesterday. There was an ADR long. So yesterday you did 91 off of the 70. So there was an ADR long entry there. Few people I know got on that one because they messaged me, and also pound US dollar as well. Pound Swiss just hit ADR. Oh, look, ADR has gone in. Let's quickly see what the Swiss did. There we go. Okay, so there's a big positive move on the Swiss. Let's just see what they did with the rate. 1%. So we got the forecast. A lot of volatility coming in, but it's bullish Swiss. Just see how far that goes. Weakness coming into the DAX. Looks like that all-time high is failing, but we'll see in a minute. I just want to see if they continue this or if this is just a whipsaw. I suspect we're just going to get a whipsaw off of this. We just got an as expected result. So I just wanted to see if they were going to rally it further. I had an exit there, which is why I quickly switched over to see, but I don't want to exit. I want to make money. So I didn't take the exit, but I could have done DD control there if you had more positions on, but I've only got 3. So see where they take it. No, it's just reset. So it's just a whipsaw. But we may well get continued strength coming in now. So what we need to wait for is Jordan, which will be at 9:30. Sorry, 9 o'clock. We're 8:30, aren't we? So 9 o'clock, Jordan will speak. We'll get forward guidance as to what's happening next. And that's when we'll get some movement basically on the Swiss. So hopefully he rallies the Swiss. But we'll see what happens. So yeah, these US yesterday, pounds US was a nice, beautiful retest. Short hit ADR, so there was an ADR reversal there, but obviously ADR is a scalping strategy, so you want to be out as fast as you can. So there was an opportunity on that one yesterday as well. So pound US dollar and euro US dollar, both of them hit their weekly ranges and reverted. So those both worked out nicely yesterday, and you also had an ADR long if you wanted it as well. So 2 trades in a day on them. New Zealand US and US CAD. So New Zealand dollar, US dollar, got out of that one yesterday, as I said. So that was a weekly range hit to the upside, reversion. You also had a long, because that was an ADR hit to the downside you could have taken. And new US dollar CAD, which I'm in at the moment and in profit. So this is a weekly range hit. Where are we? Wednesday, Tuesday. There's Monday's high. So that is the weekly range, which is actually 125 weekly range. And then it's been reverted off the reversal there. I'm long on that. In fact, what I'm going to do is I'm going to stick a break even on this one. Just in case, because we are bearish at the moment on the US dollar, or the market is bearish on the US dollar. So I'm looking for them to pull back on this leg. However, because it's a bit of a messy move off of FOMC and then a days of consolidation, and that's really the move. And if you look at that, that's a 38 retracement on that leg. So it could be where they start to add more shorts in. I haven't got far to go to get to target. I'm targeting the propulsion move that started that break. We may well have hit that. It's pretty obvious, the price action. Yeah. That may be the additional shorts. Yeah. So as we broke, limit orders were set at the previous low, and then they're adding to them. So if that is the case, I don't really want to go into drawdown on it. But hopefully I can grab 0.5% out of that today. I just need a move up of a quarter of an ADR or so. But yeah, so those are your weeklies and your ADRs. Monthly wise, it's mainly yen, but there's a few other things that have crept in there, but they are the ones that have hit weeklies as well, most of these. CAD Swiss, got Aussie US as we hit the weekly as well. Monthly rather, sorry, I'm talking about. Yeah, so there you go. There's your monthly reversal. So that's hit monthly high. We've got a reversal, so that could be that move there. We're going to need some strength in that US dollar, though, to continue that move back down again. That's a hell of a move. Very, very choppy price action on this, on all the way up. But you've got a clear propulsion move there, and that one. This is the best one because it was an accumulation break. This one here, this propulsion move, was part of that FOMC movement that we had. So this is where they started the long move, but it didn't really break. This propulsion move here didn't really break a high. It was all clean trading all the way around here, and then it just popped up. So that kind of is what I would expect, but we'll have to wait and see. It's got to get there first. So at the moment, it's putting a nice little head and shoulders in. Head and shoulders fail more than they make. So we'll see. Morning from Pontevedra, Blue Trader. It's cloudy. It's raining here. Lots. They are buying Micron stock. Why the indices are rallying. Semiconductor push. Cool. Question on SIH with conservative recovery. If I set long only, common settings. Have I got common settings? Get tapped into a long, but price goes short. It'll still take a conservative re-hedge at ADR. I've no idea. I've no idea. The whole edge of the SIH strategy, as I've said before, is we do not have a bias. I've never tested it with long only mode. You'd have to test it. I can't answer that question, unfortunately. Dude, Harold's just joined. Why does it keep going, dude? That's obviously something I've set up in the stream system and I didn't know about. It's pretty cool though, isn't it? Dude! Harold, welcome to the private streams when they start. I love the fact that everybody's signing up for something that hasn't even started yet, but it's great. It will be starting on Monday. Does anyone know why the indices have risen so much? Look up. Thought Feeder has just answered that question for you. They are buying Micron stock, apparently. Semiconductor push. So that's why the US indices are rallying, I suspect. How much of that is in Europe, I don't know. It's certainly not in the UK, but there may be German companies linked to the semiconductor industry. So basically it looks like a sector purchase in the US market. So they're buying a sector, which will rally all indices because you have companies linked to that sector in all indexes. So if I make semiconductors, you supply me with gold. Bad example, but if you were a gold supplier and you are listed in the S&P 500, I make semiconductors, my stock goes up, but because you supply me, the S&P goes up because you are in the S&P. So that's what a sector purchase is. When a sector is being bought, that will affect all indices. When you get multiple sector purchases at the same time, it affects all indices more. So rather than being individual stocks, it's very hard for one individual stock to move the market so hard. It's got to be a top 10 stock, really. Yeah, so that's basically what it is. DAX is all-time highs and holding just about at the moment. So we'll see what happens today. But this afternoon, be aware this afternoon of Powell speaking 10 minutes before market open. Might be a tricky one this afternoon. Does anyone know what oh, you've just answered that. I've just answered that question. I'm just reading the same comments over again. Yeah, so thank you very much for joining, Harold. Welcome. You have a blue star against your name now, as does Danny and Jules. You are the Blue Star Gang. I'm going to come up with nicknames for everybody with different signs, because you get different colours the longer you stay as well, apparently. I've really got to look into all this, haven't I? Okay, so ADR's covered, weekly ranges covered, monthly's covered. RSI's covered. There isn't any. It's flat. So there's nothing else exciting happening on the RSIs at the moment. So, Harold, you're also green now. Look. Harold is green. This is brilliant. I can see who who are members, and I can pay way more attention to you. I have some ideas for strategies. Excellent. That's exactly the type of member I want to have. Anyone that can make me money by making strategies that make money, I'm on board. That's the whole purpose. Let's get some strategies. I will do all the work. I will do all the automation. I will do all the testing. And then I will build the EA and sell the EA. And then you can use it to make money. It's great. So I get paid for supporting your strategy idea. I'm basically your lapdog. It's great. It's a win-win. So yeah. Yes. Well. I haven't decided what I'm doing next week. I'm going to publish a schedule. So I want to kind of have in the week, I want to have sessions on learning and on strategy development. I thought about doing a week of learning and then a week of strategy development. The problem with strategy development is when you get into developing a strategy and backtesting it, it's very time consuming. And when you get something that works, it's a bit like a dog with a bone. It is with me anyway. So when I jump on a strategy and I look at it and I go, why is that so profitable? I'm looking for ways to break it, because you can very easily find profitable strategies. Robustness testing them is a completely different kettle of fish. So what I tend to do is get way sidetracked. Everything else gets dropped and we're like, let's dive into this. The problem with doing strategy development every day or every other day is I think it will probably completely take over the stream. So I don't know. If it turns into that type of stream, great. But the people that have come for learning and education type stuff aren't going to get much value out of it. Well, I suppose you will, because by developing strategies, I'm showing you what doesn't work. So it's kind of education at the same time, isn't it? You're pronouncing schedule like an American. Schedule or schedule? I don't know what it is. It's what did I say? Did I say schedule or schedule? I don't know. Southerns and Americans, no difference. Don't know. I don't know. I don't know how to pronounce it properly, so I can't really answer that one. Anyway, so yes, we'll see. Let me just quickly look at the live stream a minute. I'm really impressed with how that's working. In the chat. Yes, I know. Yes, so look, Harold, look, you're green. You've got a little green name and you've got a little star. How very cool is that? I like it. This is good. Anyway. Sorry, I'm really easily excited, as you can see. Covered basically all the RSIs and ADRs and everything today. That's obviously the exposure I have at the moment. The main problem is Euro Pound. Still stuck in that. I have done drawdown control. Aussie dollar Swiss. We'll see where this one goes today. There's a chance that we might get a rally on the Swiss off the back of Jordan today. So we'll see what is said there. As to whether that rallies. Obviously, Jordan could also dump the market. So if that does dump today, we've got propulsion gaps galore on the Japanese intervention move. However, this was all Japanese intervention move. So there's not really any reason for price to come and test these levels, because this is all part of a mass sell-off, or rather mass purchasing schedule put in by the Japanese, which obviously affects the Swiss, because money is pulled out of all yen crosses, and that's why the Swiss rallied, because they wanted to put it somewhere safe. If you're not putting it in the yen, you've got to pull it out of everything that is yen based and put it somewhere else. Safe haven. That's why they work. So you have got some resistance coming up, which is around 150-ish ADR. So my next entry is around about 200 ADR from where we are, because I'm obviously got in at ADR today. So it may get some resistance there, but support and resistance tends to get completely eradicated when you get some kind of move like this. So whether or not that holds up, the market will be watching that level. It was an area they bought at, which is a previous area they bought at. It's this propulsion gap basically they rebought. So that was a long and an add. They didn't manage to get any more on. They had to exit. So as we broke this low, that's why we got that cascade effect, because everybody that was long flipped short and it collapsed down. So difficult to tell whether it's going to go today. We'll have to wait for Jordan to say something interesting. But there's a propulsion target on the 4 hour there. Don't really pay too much attention to the 4 hour ones, but it's this one here. So we'll see. So Euro pound is the one that I'm stuck in at the minute. Got out of that with drawdown control done yesterday and banked 1% and did DD to about 0.7%. So yeah, still looking for that to undo some more, but worried about this propulsion rebuy yesterday. So don't know. Pound and euro strength is very difficult to discover at the minute, or rather to decipher. Pound CAD, got shorts on this one at the moment, got 3 on. Got into profit this morning and it got into profit yesterday. It was pretty much just a break even, so I didn't take it off. I've only got 3 positions on. It's not enough to do drawdown control on, although I could have done some drawdown control. But I'm holding this one, hoping that this reversal that we got. So we had this 3-day accumulation. This high here that we broke through is where we added and we added and we tried to keep adding and they failed. So this long move here has failed. Sellers have now taken control. We pulled back. Sellers resold yesterday, made a new low. So as far as I'm concerned, market structure is shifted short, and I'm looking for them to add to shorts today. This is within ADR now, the start of this leg, which was a news event. So there's no reason why we shouldn't hit that today. We've got news on the US today, so there's potential for the US to strengthen today. If that strengthens, the CAD will strengthen. If the CAD strengthens, the pound will come down against the CAD. So looking for that as a target. Obviously, it could sit and do this for 3 or 4 days or whatever, you know, so we don't know, but structure is short, so I'm short. And US dollar CAD, obviously we've looked at, that's long. I've put a break even on it, and we'll see where it goes. There is a probability or a possibility of this getting back up into these propulsion gaps, but any propulsion gaps that come off the back of news have the potential to be a fundamental shift and not retest. So these become, when you look at a chart and you see propulsion gaps that don't get retested, orphaned propulsion gaps as I call them, they tend to be off the back of fundamental news which change the directional bias of the pair. So either the US or the CAD has some news that makes it scream off in one direction or the other. So these ones potentially you could come and get to, but obviously as we know at the moment, we are bearish on the US. They dropped the rates by more than expected. But with the US CAD, because the CAD did the same, this should really do a lot more of this type of price action. A little bit like the euro pound. Yeah, it's going to sit around for ages doing nothing because they're trade partners. So it takes a fundamental news event that shifts the balance to get it actually moving. Other than that, there's no advantage from either party to make large moves. US CAD, Aussie New Zealand, euro pound, all trade partners next door to each other. So those pairs tend to consolidate a lot more. So I was talking to somebody this morning in the Telegram group, well, not really talking, but Jay, about the position trader EA and the new functionality that I released yesterday with the timed exits. So we now have time-based exits in the position trader EA. And I put together a set file, which I posted this morning, which is a good example of that. So it's a 15-minute time frame. And basically all it's doing is it's using ADR reversals at 125 ADR on the pound US. And it gets out with a third of an ADR retracement. So we're looking for a very small third of an ADR. And that's basically it. If the trade doesn't work out within 24 hours, we scrap it. Yeah. If we get to Friday and it hasn't worked out, we scrap it. So basically it's a time-based exit, and it's a really good exit criteria, which I've tested with a lot on a lot of different strategies. And it's one of the most profitable exit criteria, because if you get a trade set up whether it be an ADR reversal, an RSI reversal, a breakout, whatever strategy you're trading, if you get a setup and it doesn't play out as it should, i.e. what you want it to do, most of the time it won't, because that setup is no longer valid. So what's going to happen next is either blind luck or blind luck. Yeah, the market will continue to move where it wants to move. It isn't doing what you were expecting it to do. So with this strategy, basically what it's doing is it's taking a maximum of 3 trades. It's trading ADR reversals only at 125 ADR. And it's basically saying, if you haven't done what I want you to do, i.e. it's a scalp move, I want you to have pushed and do a profit take, get me out. And it gets me out here, 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 wherever. Doesn't matter. If it has not hit maximum drawdown, it just gets out. So it gives you a very smooth equity curve. However, it's never going to set the world on fire. It's not going to make you a millionaire. But we know that there isn't any strategies that will do that, because if they were, we'd all be millionaires. It doesn't happen. So, and we're not in my 17 years of trading. It's never happened. But, and I don't know anyone else it's happened to either. So I'm pretty confident that it's not out there. But anyway, so that's as close as you're going to get to some kind of holy grail strategy, but it will only work on pairs which are liquid. So this example here that we're looking at, the euro pound, I haven't actually tested it on the euro pound. I'm probably going to completely disprove myself now. Test it on the euro pound. So with these types of instruments which are more consolidatory, and it also happens an awful lot with commodity pairs as well, the Australasian pairs and CAD, you don't get that pullback, because the move happens for a news kind of reason, and there is just no reason for them to do anything else. So liquid pairs, pound US, euro US, US Swiss, US yen, high liquidity movement pairs will probably benefit from that type of strategy better. Intraday strategies, there are pairs which are way better than others. Aussie New Zealand is terrible, as we know. We've had so many squeezes on Aussie New Zealand. Even intra-week strategies, it's hard because it goes into horrible trends, as does the yen. So but yeah, that set file I've put out there, oh, wouldn't you know it, it's also profitable on euro pound. So that disproves my theory. But anyway, so 6% drawdown and 32k return. Take that. So yeah, so it's a really nice equity curve, that as well. But the other thing that this new setting, and the reason I introduced this new setting, is because people, it's not just one person. This is something I do a lot. If I get asked for something in the EA or any of my products, it's usually one person wants to test one thing because they're unsure if it might or might not be profitable. And that's what I did with the market reversal alerts EA. People gave me loads of things, said, could it do this? Could it do that? And I built it to do everything everybody wanted. And it became a bloated monster that just ground to a halt in the strategy tester because it's too much. But multiple people have contacted me saying they're using the position trader EA for intraday trading, scalping, M5, M15. So this is a very good exit strategy for scalpers. So you do not want to hold over the weekend on scalps because you're usually using higher risk, and gaps will hurt you, and spread overnight will hurt you. And you also, with scalping positions, have setups which they're moves that you should be out of intraday. So if 24 hours later you're still in the trade, it ain't happening. Yeah, so that's why I introduced those for the people that do that. So obviously it works on quite a few pairs. I haven't done any deep testing with it on different pairs. This is a 2-year test. So let's try commodity pair. Let's try Aussie CAD and see what Aussie CAD does. I would imagine this probably won't be particularly good. You gonna start? There you go. Right, end of stream. I've just found the Holy Grail. Bye-bye. Okay. I'm just going to delete that set file because I don't want anyone to have it. I'm joking. Okay. Yeah, so we are getting some hits. These will be, I imagine, Friday closes. So basically ADR reversals that have gone into drawdown by less than 3 ADR in the week. Although you'd only hold for 24 hours, wouldn't you? So these are probably ADR entries where you're getting 200. These are probably the 200 to 300 ADR days. Let's look at it. Let's do some. This is the stuff we're going to do in the private groups. But this is, let me just look at this trade here. 29th of March, Aussie CAD. What did we do on the 29th of March? Yeah. There we go. So this is multi-day ADR runs. Not going to work. Yeah. So basically what's happened here is we've got in to an ADR reversal. Yeah. And we've taken our entry. The next day we've got an ADR hit against us. News event. That'll be a news event. I'm pretty sure if you go and look at the 29th of March, there's probably a news event on the CAD or the Oz. We get an ADR hit against us. So what it's doing is it's getting in with a position. It's getting pushed. It's taking a second position, getting pushed, stopping out of that one completely because it's taking a third position, getting pushed, stopping out of that one completely, taking another position, and eventually it makes a little bit of profit. But it's taking multiple hits in a row on multiple ADR pushes, typically news events. You won't know it's a multi-ADR push off the news event until it's happened. Nothing you can do about it. You can't predict the future. So these little spikes here, and you can see there's the recovery. You've got a little green line down, which is your open P&L, suddenly popping up. Yeah, so these are protected. So in position trading, we use gradual drawdown control. In this, it's get out. This isn't working. Get out, because it's an intraday strategy. But you're still going to get multi-day runs, which within 24 hours are going to go 2-3 ADR against you. Nothing you can do about those. Yeah. So, but yeah, that's good. Let me try it on Aussie New Zealand. This won't work. If this works, I will just give up and just do this. We'll cancel everything because Aussie New Zealand is a bugger. It's a horrible pair. If it's profitable on this, I'm just completely switching strategy. But this is what strategy development's all about, trying to break it. Yeah, I want to break it because I don't want it to be. There's got to be a flaw in it. If there's not a flaw in it, it's too good to be true. There we go. That's what I was expecting on the Aussie CAD, to be fair. So it's about cherry picking the instruments that are the market conditions are compatible with the strategy, not about picking a strategy that works on everything. It's about picking a strategy that works with conditions in the market. Aussie New Zealand sits around doing absolutely nothing, then goes crazy, then sits around doing absolutely nothing, then goes crazy. It's not going to work with a mean reversion strategy intraday, is it? He says, making profit with it. But you can see it's not good. Look, I mean, it's profitable, but it's not. It's going to have really bad. This will be a massive trend in Aussie New Zealand. We'll see what date it is, but I'm pretty sure you'll find that is a trend in the Aussie New Zealand. 17th of August 22. 2022. 23. I'm going to have to go 4-hour chart. I'll find it. Yeah, there we go. Right. I was in this. Do you remember? No, none of you will remember. But I was in this on the live streams. Go back to the August live streams from 2022. I got in here. That's October. Wow, what month is August? 9th. It's here. Right. So that massive crap you saw in the test, is that. Yeah. We're trading a intraday ADR based mean reversion strategy in the strongest trend the Aussie New Zealand has ever had. It ain't gonna work. But unless you can predict the future and you know that's coming, you ain't gonna stop trading it. Yeah. And I didn't either. So there you go. So that's that. Yeah. But do you know what the good thing is? We started off with 100K. You can't see it because I'm off the screen. There we go. We started off with 100K. Yeah. We went through that horrible, horrible, horrible part of the system where it just didn't work at all. Yeah. We drew down by 4 grand. Yeah. That trend where it hemorrhaged cash literally for 2 months, 2.5 months, I think that was that squeeze. It lost 4% because it did actually have some profitable runs within that. Because what was it doing? Taking ADR shorts. Because the market doesn't go like that, does it? It goes like that. You had ADR reversals short within that trend. That's when it recovered. Then it lost. Then it recovered. So it actually, what it did for that year was starting May 22, we stagnated until May 23. So basically 2022 was not the year for the Aussie New Zealand, but 23 was. And it only took 4% drawdown. I'm quite surprised actually how effective that is compared to my normal ADR strategy. So yeah, interesting. I will play with that more. We'll develop that in the lives. I just realized that's off the top of the screen as well. I'm not having much luck with technology today, am I? Anyway, someone just alerted. What's that alert? I just completely missed that alert. I just minimized it by ADR on the Euro odd. So there, we've had loads of Swiss just hit, obviously, as well, but Euro odds just hit. So we got a weak Euro coming in at the moment. So there's an opportunity for a mean reversion here. So yeah, there we go. Can the let me just go back to the chats. Can the ORB-EA run on the 1 minute time frame? Yeah, you can run ORB. ORB, no, ORB is 5 minute. I've never tried it on the 1 minute chart. The way that it does calculations is on candle time and number of candles. So if you're using the 1 minute time frame, I think you'll find it will put the ranges in the wrong place. Try it. I don't know. I haven't tested it. It's designed to be run on M5. Try it. I don't know. Morning, noob. Morning, Javier. Como se llama el indicator? No idea. Franco seems to know what you're talking about, though, because he's replied in whatever language that is, which I assume is Spanish or Portuguese. I don't know. I don't know what that means. Como se llama el indicator? Have you got a llama indicator? No, I don't have a llama indicator. Noob, just downloaded it. Well, there you go. There's the Holy Grail. I've just given it to you. Damn, I should have saved that for one of the paid member streams. But anyway. Yeah. What's the time window of these back tests? They were 2 year. So they were May 22 to July 24. So just over 2 years. 15-minute time frame. And basically, it's just the normal ADR strategy, really. It's 125 ADR, which is the one that I prefer. I much prefer a 125 because the odds at 125 are just better. And it's taking a maximum of 3 trades. So if you, and it's getting in at a quarter of an ADR. So it's a really aggressive strategy. Yeah. But because it's an intraday scalping strategy, you can afford to be more aggressive because you are playing, you want to get out quick. Yeah, so you get in aggressive, you get out aggressive. Small targets. Again, one of the sessions I've got planned is risk reward and demystifying this myth that you have to have a positive risk reward on your trading. Utter bollocks. You don't. So this has got a negative R. I'm risking 1% over one ADR, and I'm targeting a third of an ADR. Yeah, I'm targeting it's a negative 1-to-3 ratio. You just seen the results on 3 pairs, and I hadn't tested any of the other ones. So I'm not curve fitting this. That's the first time I've tested any of those pairs apart from pound US dollar, and you just seen the results. It all works. It's ADR. It all works. ADR. This is why I trade ADR reversal, and I have a complete course built around ADR reversal and RSI mean reversion. It works. Yeah, it's elastic band theory. It's how the banks place their orders. We are taking advantage of intraday bank movement with ADR reversals. With position trading, we're taking part of intraday swing. Intra-week, intra-month swing bank movement. So the main difference between that and the normal ADR is the auto trading. No, it's not. It's the timed exits. Yeah. So we're getting out at 10:45 on a Friday, just flat. Want to go flat on a Friday. And if a trade has been open for 24 hours and we haven't hit our target, shut it. Because if we haven't hit the target within 24 hours, they haven't done the profit take move. If they haven't done the profit take move within 24 hours, they're probably not going to do the profit take move. So we'll get out. We'll take a loss. We'll take whatever we got. We might be a profit. It doesn't have to be a loss. It can be, we just close the positions, all of the trade, individual trades, not the whole position. Yeah. Single trades that applies to. Didn't make that clear. But that is a single, oh, it does. It says in the inputs, exit individual trades, not position. So if you've got ADR reversal, didn't work out, second position, didn't work out, 24 hours passed, that one shuts, that one remains open until 24 hours has passed, then it shuts. So it gives this one a chance to pay for that one. Yeah. So again, like everything with position trading, you're never going to get it right first time. Give the market time to prove you wrong and give yourself an opportunity to get a second entry right. Strategy is good, just never going to be right first time, is it? It's the whole edge of the strategy. Again, I've got a course in the private group. I've got a what is an edge session planned. Yeah, your job is creating edges, finding edges. And there's not many ways to create them. Llama indicators. Yeah, always good. I like llama indicators. So lesser chances of getting into bad squeezes. No chances of getting into bad squeezes, Mumo. It's a hybrid, I would call it, position trading strategy because it only takes 3 trades. So your drawdown is automatically done. If it goes 3 trades, you do in drawdown control at 100% of your initial trade. So you are going to be taking anything from a half to 1 ADR loss every time you lose because we're scaling in a quarter of an ADR apart. If it continues to squeeze, yeah, I mean, it will continuously take losses, but because we're only looking for a third of an ADR pullback, it's very unusual for the market to push for 3 days solid in one direction without any kind of pullback. Even if you get a bull candle followed by a bull candle followed by a bull candle on the daily. What the hell has happened there? If you get a three-day push, yeah, 3 bull candles or 3 bear candles in a row. So we went down, yeah, then we pulled back a little bit, then we went down, we pulled back a little bit, then we went down. So that is probably one that would be a little bit of a dip in your equity curve because there wasn't enough pullback. But here, look, we went up. Then the next day we came down, 50% retracement on yesterday's price movement. Then we pushed up. Here we retraced probably 70% of yesterday's price movement before we pushed up. there are intraday exits on both of those days. It's 3 bulls in a row, but there's still a 50% retracement. That is our exit on ADR reversal. Yeah. Big push up, retracement, 38. Then we pushed up again, up to here, and then it retraced 50%, and then it retraced 100%, and then it pushed up again. Those 2 days, you had many, many chances to exit a mean reversion trade or a second entry mean reversion exit. Yeah, that's the whole advantage of the ADR strategy intraday. You've got constant movement up and down. That's what we want. Yeah, it's the elastic band theory. Market cannot continue without profit taking because first of all, there's no liquidity there to take the other side of the order. So they have to come down and find people that are willing to take the order. And then they add the second part of the order. Or the order is done and we get an A-shaped recovery. It's just what it does, isn't it? All the time. I'm waffling today. It's 9 o'clock. I should be going into the private member stream now. Bye-bye. I'm not ready today because we haven't set it up yet. Just spewing out genius. I know it's difficult when you're a genius. We have no llamas, only weathercocks. Weathercocks. We have no llamas, only weathercocks indicators in here to get our Lambos. Is that an autocorrect, or am I not knowing what a weathercock is? Oh, weathercock indicators. Yes, the wind direction. Sorry, we call them something different in the UK. I don't know where you're from, noob, but in the UK we call them weather vanes. Some of them have cockerels on them, which I presume you could call a weathercock. I'm probably going to get banned from YouTube now for using the word cock too much, but it is just about a cockerel I'm talking about. A weathercock, yeah? Let me type that into Google. Oh, no, I'm not going to type that into Google, just in case. Setting them, I'm just going to move on. Setting the maximum trace to 1 might have lesser drawdown. It won't. I don't know. I will test it, but I don't think you'll find it will. Because what it will do is it will automatically get you out when it will get you out. Basically, every time it moves a quarter of an ADR against you, you will take a quarter of an ADR loss. But we'll try it. Let's try it on the pound US because I know that's profitable, but I don't think that was the most profitable version of this, was it? But I think you'll find that you'll just hemorrhage quarter of an ADR losses here. You might as well use a stop. Basically, what you're saying is use a stop loss, aren't you? You're saying use a quarter of an ADR, roughly a quarter to a half an ADR stop loss, and target a third of an ADR profit. It's not bad. It's a lot more jerky, the equity curve. Because obviously you're taking a lot more losses. It's more of a scalping strategy, like a traditional stop loss based scalping strategy. So that produced, so yeah, I mean 2% drawdown, but you only made 14 grand. So prop, good one. So if you could double the risk in prop, I'm using 1% risk there, so use 2% risk over an ADR because you're getting stopped out. It's getting into additional trades at quarter of an ADR. So if you get into a trade and it pushes a quarter of an ADR above and it gives you another signal, you get in there and you take whatever that loss is, whatever that distance is, because it's not going to get you in at a quarter of an ADR. It's going to get you in on the next sell signal above a quarter of an ADR. So you'll take whatever that loss is. So you'll know, I mean, you will sometimes take a 1 ADR loss. Potentially. Those days we looked at on the Aussie New Zealand, you probably find that hemorrhage is a hell of a lot more money. But yeah, no, that works. I haven't tested any of this, guys. This is what it's all about. Yeah. Testing. What if you just took 2 strategies? So we generated 14 grand off of 2% there. Let's try it with 2 entries. See what the difference is. Write that down. 14k, 2% DD. Setting max trades, llama indicators. Is this to do with the astrology indicators someone talked about yesterday? It could well be. Yeah. This person who talked about llamas earlier has gone. Llama obviously means something in Spanish or Portuguese, and I don't know what it means. Translate. Translate. No. Let me. I'm going to have to copy it. No. I want to see what he said now because I don't know what he said. What is the indicator called? I don't know. There's loads of them. So taking two positions resulted in 3.4% DD, but we made 24k, almost double, with 1.5 extra there. And the original set file that I was using, which was 3 entries, which is giving it a little bit more time to play out. We'll see what the difference is. So that is 1, 2. And we'll see what the third was. The llama indicator. I like it. Yeah, see, bigger drawdown, bigger dips because we're holding for longer. So we're taking more drawdown. However, we're giving our trades longer and further to play out, which should, in theory, produce a better profit curve. But it's about personal preference, isn't it? It's always about personal preference. If you like more risk, this is the one. If you want less risk, that's the one. Yeah. So this one, which is 3 entries, gave us 27k. So not a lot of difference there, and put us into 4.15 DD. So not a massive difference, is it? So if you want low DD, I mean, they're all low DD, all of them. So, you know, if you're talking prop strategies, this is it, isn't it? But they won't let you use EAs. And a lot of them now will not let you scale into positions or have one-sided trades because they know it works. I've been doing this for 5-6 years, this style of trading, profitably. So why do you think they don't like you doing it? Because you make a hell of a lot more money doing it. Therefore, they don't want you. They just want you to pay $500, fail your evaluation, pay $500, fail your evaluation, rinse and repeat. You got a strategy that works? Off you go. Not interested. Yeah. So they will all work in prop. In fact, you could double the risk and they'll all work in prop. But don't forget, this is 2 years. You're making 14 grand over 2 years, 24 grand over 2 years, 27 grand over 2 years. But this is 1 out of 28 instruments. Yeah. So you're not going to get the same return on all of them, obviously. Look at Aussie New Zealand. You'll have a year on the Aussie New Zealand where it won't make you a penny and it will take you into 4% drawdown. But we looked at, what did we look at? Aussie CAD, pound US dollar, euro pound as well, wasn't it? And all three of those produced a very, very, very similar equity curve to that. So again, test all the FX pairs. And this has not been robustness tested yet. So if we go back and test 2022 and go back to 2020, yeah, and run the test again, this is robustness testing. So what I've just done there is over 2 years. Looks good. Now let's try it over a completely different time period with completely different volatility, completely different price action, completely different news, completely different interest rates, just a different market. Yeah, same instrument, same strategy, different time period, and see what the result is. If the result is good, it's robust. Then we could test it from July this year to date. And that small test of a few months tells us the forward testing is also working. Then we can take it pre-COVID, retest it pre-COVID. Is it still profitable pre-COVID? Now, the market conditions were different pre-COVID to post-COVID. So you might find that this strategy is, where we are now is the new world of trading. It may not have worked pre-COVID, but that doesn't mean it's not going to work going forward necessarily, does it? So there's your 2 year before equity curve. Not as pretty. Made profit, but you took 8% of drawdown to make 18.5 grand. So in total, we've made 27, 37, 40, 50K in, so 50% return in 4 years. Go and find me a bank that's going to give you that. Not many. Not any. Not even Warren Buffett. Don't tell Warren Buffett, because he'll hire me and then I won't be able to do the live streams. 8% of drawdown. I'm more than happy to take a 1.63 profit factor on a strategy that trades intraday reversals. But you've got a big problem there. In the 24th of September 21. Was that when we started changing interest rates? September 21. It's that basically. That doesn't look like a reason to hemorrhage a massive drawdown like that. (24th of September 21) until the 30th of September 21. Wow. So that 4-day period there caused that massive drawdown. I don't buy that. That's a data error. There's no way it took 12 grand in drawdown over that price action. That's a data error. It's got to be a data error. Is that this? Look at what else it's traded through. It's gone through all of this here and here and that and that, and it hasn't had that. So that's some kind of error in the data, which I'm surprised about because you don't normally get error in the data. But anyway, it's tick data, so it shouldn't really have errors in. The way that you verify that is you run a test on another strategy over the same period. So use a different EA or a different strategy completely and see if this period of time gives you consistent errors or gives you consistent, either it's going to give you a massive profit or it's going to give you a big loss around about that period in time, in which case then you will see that there's an error in the tick data. So this is why visual backtesting is so important. Yeah. So when you do non-visual backtesting on strategies and optimization testing, you just get a result at the end of it and you're like, oh, that made money, that didn't make money. When you actually run the test and see the equity curve, or better still, get the data out into Quant Analyzer and run through it, you'll find things in there that you'll be like, why did that make 25 grand in one trade? And you look at it and you go, okay, so it was a weekend hold and a war kicked off and we had a gap of 7 ADR. You can get rid of that result because it's not going to happen again. And if it does happen again and you're worried about it happening again, you know the answer. You close on a Friday. So the positions, the strategy that you're developing has to have a Friday close, because if it doesn't, there's an opportunity in the future maybe for another war to kick off and cost you 25K. So, but if it's not something like that, it's a data error, which I'm quite surprised because this is Dukascopy data and it's a major and I haven't seen it before. So I'll have to check that. But the overall equity curve on it looks good, doesn't it? Long term. You can also test this. This is only using control points as well, by the way. So you got to rerun this on tick data level to check on tick data. It may be a different result on tick data. Yeah, you need to do the due diligence on it, basically. But, you know, as periods, it's a normal strategy. As periods where it just goes, sorry, market conditions are really squeezy. I can't help you. It won't make money. There's a stagnation period there, look. So until we hit that line, which is there, that whole period there didn't make profit. Didn't make a loss because it got back and now it's off on profit run again. But this is a period of drawdown in your account. Normal, totally normal. That was Dukascopy, by the way, that data. Also, just test it on another broker data. It could be a quality, it could be a data issue because the data's old. There's all sorts of things it could be. This is the problem with backtesting, and backtesting should be used for robustness and for testing strategies. It shouldn't be used for results necessarily. Gives you an idea of what the strategy is likely to do, what the pitfalls in the strategy are, where the good points, the bad points are, so you can develop it. It's not about getting this and going, hey, everybody, we would have made X. You wouldn't have made X because your VPS would have gone down, your internet would have gone down, you'd have gone on holiday and turned it off. There's all sorts of stuff that would have happened. And if it made 70% of its profit in the time periods it wasn't trading because you were doing something else, you didn't make that profit. Yeah, it's just showing you that the strategy is robust, has an edge, that will play out over time, but next month, next week, it could make a loss. It could also make a massive profit. It could hit 10% drawdown and blow your funded account. It could double your funded account. Yeah. I don't know what's happening next week, and neither does this. But it's robust. We've tested it over 2 time periods, over 4 instruments, using 3 different settings. We've just done a robustness test. There you go. So there's no point in joining the private streams. I've just done everything that I was going to cover. There you go. It's not really. It's 9:30. I better get on with other stuff. Could also do worse if you leave it longer. The drawdown could increase. Yeah. So you could extend. The reason I've picked the 48-hour, the 24-hour time scale on this is because I put the tests that I'd done through Strategy Quant. And Strategy Quant on different pairs with another ADR strategy, it was very clear anything held over 24 hours had a lower strike rate, therefore a lower probability of playing out. So that's why I picked 24 hours, not because it's a day, but just because anything over 24 hours started to drop off on the profit curve. So you can fine tune these things. This is more curve fitting though. So you could find out that 14 hours is the sweet spot, but that's 14 hours is the sweet spot in the last 4 years. It could be a coincidence. You've got to pick something that makes logical sense. Think about how market movement works. London session, price moves. New York session, price moves. Asian session, we accumulate. If we took a trade anywhere during mid to end New York session, the next day London opens and New York opens, they are either going to profit take or add. 24 hours later, they will do the same. So by exiting 24 hours later, it's logical. It means that they didn't continue the move they started. Yeah. Or they decided not to do anything, in which case we want to be out. That's the reasoning behind it. It's based on session movements. 24 hours, 14 hours is a random number. If you set it at 29 hours, it's a random number. There's no relevance to 29 hours. This is why I use these moving averages on my daily chart. They're relevant. Yeah. The 24 moving average, people go, what's the relevance of that? And the 72, they seem like random numbers. But there's 24 trading days starting in New Zealand and going through to close in New York from Sunday a month. So there's 24 trading days a month, not 20. There's 72 trading days in a quarter. Yeah, so these numbers are relevant. 26 isn't relevant in an intraday strategy, and neither is 21. but 24 is, because it's start of session, exactly when it kicks off again. And so the last time it kicked off and you got in, we're looking for the next time they kick off, or can you help me or not type movement. Logic. Everything I do is based on logic. There's no right or wrong, exactly. You could consider a small sub fee for Telegram as well. Nah, I don't want to do that. I don't want to charge people left, right, and center for just stuff. We'll filter out the scammers. It would, but these are my support channels. Yeah, so people have got problems with the indicators or the EAs, not problems with the indicators or the EAs, but problems using them or setting them up and that sort of stuff. Those are the support channels. I can't charge people for, here you go, buy this indicator. Now buy the support for the indicator. Can't do that. But Discord, I will have a private group in Discord as well for the private sessions in YouTube, so that we can discuss stuff that we've done in the private sessions. And that'll obviously be free as well, but for people that have joined, I've got to figure out the logic of that as well. Yeah, I don't know how to do it. Maybe a quality backtest data. Yeah, covered that. Could be the date. You could type the date you want to go in the bottom left of the chart. Yeah, you can, Mumo. I know. I do know about that. Going to the date. It's there, isn't it? I never remember what format it is. I have the same problems with tick data. Yeah, I mean, tick data is more accurate than broker data, but it's still broker data, yeah? So the tick data that I use two brokers. I use DarwinX and Dukascopy. And I have also got, not FX, so who else have I got? I think it was Alpari. No. Did I delete it? I must have deleted it. But I use DarwinX to test, and I use Dukascopy to test. So I use two broker data feeds. So when I test and robustness test a strategy, I switch over to the other broker, and then I do the same test again. Because if I get completely different results on DarwinX to the results I get on Dukascopy, something's wrong. It needs to match up. It will never be the same. It's always it's not completely different, but it's always different. But if the equity curve is up on both, it's robust. Yeah. So I'll test the DarwinX data. The problem with DarwinX data is it doesn't go back as far. It only goes back to 2017 rather than 2011. But personally now, I'm doing the vast majority of my testing from 2020, because this market, all markets since COVID, are very different in their movement. So I personally think if you robustness test over 10 years now, you're probably likely to get a little bit more of a curve fit strategy than if you just did it over the last 4, because I don't think we're going to go back to how the market was before COVID. We're in a different world now. Everybody's in a different situation. We have changed an awful lot of stuff in the world since COVID. Yeah. So more than 50% of people work from home now. Yeah. 2020 at the beginning, 100% of people pretty much worked in an office. That's a completely different economic driver. Everybody's got a different financial stance now. We've got wars now we didn't have. There's so much change. So I think if you test over 2020 from May onwards, that is probably what we're going to find is going to continue for the next X number of years at least. So, which helps with speed of testing as well, because if I also have run these tests over previous. Going back to 2016 to 2020, they still work, but they work slightly differently. There's a lot more dips because we had a lot more crashes quicker. But you can test it over COVID as well. If it works over COVID, it's as robust as it's going to get. Any strategy that survived the COVID crash is what you want, basically, because that was an absolute killer, wasn't it? There's not much that survived COVID. Most strategies died very, very quickly. God, it's so long ago. So long ago. There it is, March 2020. Holy crap. Normal price action. A big day. Holy crap. Yeah. Mean reversion. Can you imagine buying that? But yeah, it all changed then. Everything changed. Everything changed. My bank balance changed. Not for the better. Pain. I was hedged in that as well. I had to hedge my account. I've never done that before. I've never got to a position where I've had to hedge my whole account and sit there and go, what the hell? It was not a good time. If no trade, no drawdown or win. Sorry, I've skipped on. Do you have to be in a trade at this time to see something to happen? Do you have to be in a trade at this time to see something to happen? I don't understand the question. Can't they start wars at weekends? That would be nice, wouldn't it? It shows me losses, but on real account, it generates profits. I have the same problems with tick data. Yeah. So, and again, this is the thing. This is when you're doing backtesting, and it's an incredibly important lesson in backtesting. If you do an optimization test and you get no results in your testing, it's because everything was generating a negative return. It only shows you when you use the optimization setting in MT4, that one there, profitable results. So I've done tests and I've looked at it visually and gone, that's amazing. And I've done robustness testing on it and gone, there aren't any results. Why is that? So I take one of the robustness tests and run it visually, and you'll see suddenly a drop for no reason. And it's a data error. So doing this type of testing where you see it, you just get the graph, it just goes right. And this is two reasons to do this. First one is, are there any issues with data? Yes. If you know there's issues with data, you can either try and fix it by re-downloading the data and see if it helps, or you have to run your tests up to that period and then from that period. So just filter that out. That will give you a proper test. So use this as in sample, use that as out of sample testing. Remove that. Yeah. Which is what I do with COVID. So I test up to December 23, I test up to February 2020. I miss all of March and all of April, and then I start again in May. So I'm filtering the whole COVID crash recovery because it's not fair to test that. Different. Danny, you just bought the Posier. Welcome aboard on the Posier. And super chatting $2. Thank you very much. You have just bought the EA. You could have just told me. You don't have to give me another $2, but I'm very appreciative of the $2, obviously. Thank you very much. I hope you enjoy it and test that strategy because it looks bloody good. That's in the Telegram group, that set file. So yeah, the first reason obviously is to filter out data crap, get rid of all the rubbish. The second reason is to find these, because if this is not a data issue and it is a point where your strategy for some reason keeps making losses, big losses, yeah, you can look at every single one of those downticks and the date that happened and look at the chart like I just did. Go to the chart, go to the date, look at it. What happened to cause that catastrophic problem? 9 times out of 10, you will find it is a news event that goes against you. And your strategy is trying to trade against that news event. Yeah. Now, you can't filter the news event out because regardless of whether that is an interest rate, a CPI number, or whatever it is, you don't know in the future what those events are going to do. And you can't say every time there's a news event, I'll turn the EA off. We have news every single day of the week. What are you going to do? Never use it? No, it's not a practical solution. So what you need to do is look at them and go, right, it's because what happens is I get into a trade long, I get into 3 positions, and every single time it makes a loss on all 3 of them. Yeah. So look for something that is common between all of them, and we can create a filter. So if you could use RSI or maybe it's because it goes against the trend. You could use a moving average filter, or you could use some kind of other filtering system to get rid of these or smooth them out. But testing it, you've got to make sure it doesn't ruin the rest of the equity curve. So that's another reason to do this type of visual backtesting, so that you can identify the problems with the strategy, because sometimes they're easy to iron out. And it's a fact of, oh, I see, it's because I'm scaling in 1/4 of an ADR apart. On every single one of those instances, if I'd have gone 3/4 of an ADR apart, it wouldn't have happened. So run a new test on 3/4 of an ADR between entries. Do I still get profitable equity curve with it? And has it got rid of those? Yes. Problem solved. You were just too tight with your entries, so move them out a little bit. Or on every single one of these occasions, it managed, instead of 0.3, which is my target, it managed to get to 0.2. Okay, so rerun all these tests, because we know that every single one of these trades hit 0.2, because they hit 0.3. So they definitely hit 0.2. To get to 0.3, they had to go through 0.2. Yeah, logical. If every one of these, if I'd have had a target at 0.2, they would have all been profitable and it wouldn't have gone into drawdown. Retest it with that. Does that smooth out that equity curve further? But you'll only be able to identify ways to improve a strategy if you can identify the problems in the strategy. And you can only do that using visual backtesting. Every strategy I ever develop, the first stage of testing is complete visual mode. So I do that. And I sit there and I zoom out. And I sit here for an hour and I just watch the strategy play out. Oh, that's the strategy I'm developing. What am I trying to do? Move indicators. Wake up. See, I sit there and I basically go and I watch it. And I'm like, whoa, this is making money. That's great. And then all of a sudden it will lose. And I'll go, that's because of X. So how can I get over X? Let's try a little bit wider. And that's how strategy development works. It's just trying to visually see where an edge fails and get rid of the edge failures, not make this better. I don't want to increasing profit target isn't going to make it more profitable. It's going to give it more opportunity to go into drawdown. That's not the right solution. The right solution is to try and find a way to filter out this. Could be time of day. If majority of the losses that happen during the Asian session, we simply put a time filter on it from 8 a.m. in the morning. Gone. Simple filter, very effective filter as well. I've used it many times. But yeah, it's lovely. See, like that, there's nothing you can do about that. There was a news event. It's very clear. There was a news event which hit ADR and then it progressed for 2 days afterwards, because that news event was a fundamental shift. The market changed direction. Can't do anything about that. It's going to cause a dip in the equity curve, but it will recover it, because fundamental shifting news events they've only got really one chance a month to happen, and they don't happen every month. They happen every quarter, every 6 months. You get these bigger dips. The rest of the time it's just grinding away, making money. And don't forget, this is on low risk as well. So upping your risk, you can look at this and go, sometimes you look at a strategy and you think this is a prop strategy. It has periods where it's just terrible. But when it's not terrible, can you imagine what you would have made out of prop? There. This thing just went 3 weeks on the trot. It just went money, 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 money. You can't control when that happens, but when it happens, you will be just going, thank you, and you'll be withdrawing over and over and over again. Awesome. There's the issue. And you can visually see the issue as well. But anyway, quick lesson in, and that's the stuff we'll be doing in the private sessions. Way more of that. Will M15 hit ADRs slower than M5? No, M15 ADR is ADR, isn't it? ADR is ADR. It's not time frame related. ADR is the average daily range of the instrument. So whether you hit it on a 5-minute candle, a 15-minute candle, or an hourly candle, it's ADR. Your entry will be either 5 or 15 minute. So that will be different. But you will notice in here the MA entry signal is not using the 9 MA, it's using the 5. So it's pretty much as soon as you get a bear market, a bear candle, I'm in. So it's using the 5 EMA, not the 9 EMA, much tighter EMA entry. So that's the 9. Oh my God. So there's your 9. And this one is using the 5. Yeah, so you see the difference. The 5 hugs price and gets you in a lot quicker. So that candle there, for example, was an entry on the 5, but it wasn't an entry on the 9 until there. Sometimes you'll get exactly the same signal, but when you're trying to go long, you know, you're going to get in on this one there. Yeah, but you haven't got in it on this one. So again, you know, I say all day long, there is no right or wrong. There is different. Yeah, test it with a 9 EMA if you want to see what the difference is. I haven't tested it on a 9, but what I wanted to do on ADR reversals with getting quick. Yeah, and this is the problem with the reversal alert CA with ADR is sometimes it takes a long time to get the reversal on the market reversal alert CA. With a moving average, you're literally looking at a bearish engulfing or a bullish engulfing and you're in. Yeah, the market that candle there is an entry on the 9 and the 5. Yeah, the market reversal alert CA trigger is there. Look at the difference. Yeah, if we're looking for a third of an ADR, I don't know what ADR is on the pound US dollar at the moment, but that is 6 pips. So it's around about 6% of the average daily range difference. So it's 10% difference in entry. We're only looking for a 30% move. Yeah. And we had to wait almost 10% of the move before we even got an entry with the market reversal alert CA. It's so much better, I think. But this is why I built the position trader EA, because although I love the market reversal alert CA and indicator, it has flaws. But the disadvantage of the moving average is it gets you in too quick sometimes because you haven't had a conversion of a confirmation of structure change. Again, that's the negative of moving averages. There is no right or wrong. You do this when you do strategy development. You find it doesn't matter what you use. A lot of the time, there will be pluses and minuses for everything you do in every way, because as soon as you've done something, the next candle is a completely different story. It's going to do something different now. So picking your entry could be there, or there. That's what robustness testing shows us. Test it with a 5, a 9, a 7, and a 10 moving average. Test 4 different moving averages ranging from 5 to 10. Are they all profitable? Yeah. It's robust, so it doesn't matter what you pick, does it? Pick one. Which one's the best one every day? It's the one that's best every day. But unless you can see the future, you don't know which moving average to pick. I just pick one that gets me in faster. If you want to be more conservative, pick one that gets you in slower. You will still have a positive result. You just will get in at a different point to me. You may get in at a higher price and make profit, whereas I might get in at a lower price, have to take 2 entries and take drawdown before I exit. You're better because your moving average worked better than mine that day. Doesn't mean it's right or wrong. It means it's just different in the way that you entered. This is what it's all about, testing all of this. Yeah, and this is what we're going to do in the private streams. I want to spend a lot of time doing testing, because testing is invariably how you make money. It's how I came up with all my strategies that I've been trading for the last 6 years. I tested them to death, and that's why I use them to this day, because I tested them to death and I knew they were robust. They worked before COVID, they work now. Differently now, and I've adapted, I've adjusted them slightly. And again, you have to do that as well. But you test again. When you get to 2022, you're like, I'm not quite making as much money as I was last year. Why is that? Test. Holy crap. ADR 10 isn't as good now. Maybe we should be using a longer ADR because this market's way more flippy floppy. So we need to smooth out that curve a little bit for what we're getting in with risk. You need to look at all this on a regular basis. Otherwise, you're just going to stagnate. This is why no strategies work. You find a strategy from 2 years ago on YouTube, Yeah, the guy tests it over 6 months and a year, and you're like, holy crap, that thing's amazing. Go and test it now. Market conditions are very, very different to what they were 2 years ago. See if that strategy still works now. Is the guy still around? No, probably because the conditions have changed. He's no longer profitable. It's nothing to do with him, nothing to do with the strategy. It's the market. That changes and adapts all the time, which is why we use elastic band theory and mean reversion, because as long as the banks are operating, they will never stop doing market structure, because it's the way that they make profit and it's the way that they execute client orders. They will not stop executing client orders and they will not stop making profit. If that changes, everything I do goes out the window. But they're banks. They've been doing it for 100 years plus. They're not going to stop. So the strategy techniques that I use are robust in the fact that if the banks want to make money, I'm going to find their profit take moves at some point. Yeah. So it's all about finding those types of edges. You know, and if you throw strategies at me and say, I've got this brilliant breakout strategy, it works between 6 a.m. and 9 a.m. every day, I'm going to turn around immediately and say, what about when the clocks change? Oh, haven't tested that. No, it won't work, because it will work while the clocks are right on your broker between those times. When the broker changes, unless you change that, every back test you do is wrong. Yeah, all that information I have that I can easily just pick up or dump, help you pick up or dump strategies, because I've been doing it a long time. It's just old and wise, you know, the usual stuff. Anyway, I'll shut up now. I'll be back tomorrow morning, same time, 8 o'clock. Thanks for those that have subscribed today to the members bit. I will be putting a video together. I might even use the one from today, because I did waffle on about the membership levels a lot today. And then next week I'm going to start doing those private streams. So it will consist of a normal stream and then the members streams, and we'll get down to more testing and more learning stuff, as well as obviously just doing what I do on a daily basis, which works. So we'll see where we go. It doesn't look like a lot of movement on that Aussie Swiss. So we did get a little bit more of a push down. But inside bar at the moment. So until we break that or that today, if we break that or that today, we're just sitting around, aren't we? Okay, so I'll be back tomorrow morning, 8 o'clock. Anything you need, let me know, Telegram or Discord. I will be working on stuff. So I'll let you know how I get on with the plan for next week. And then I will put something in the groups over the weekend about it, I should imagine. So, all right. Have a good day. Anything you need, let me know. Otherwise, I will see you next time. Have a good one.